50. So my losses are massive. I'm losing $100 a share, right? So they have to regulate this, because if they didn't, then you would see the entire market crash. So the market doesn't, the clearinghouses and the brokerages, they don't let you do anything that is too big for your britches. You really have to act your wage, so to speak, in the financial markets, which is why my biggest piece of financial advice, if you will, it's not advice. I don't give advice, but my biggest thought is suggestion would be help your kids build a capital base when they're young. Do that 5-year pledge. If you haven't done the 5-year pledge, text the word pledge to the number 87948, and I'll send you a training on ETFs and stuff like that, because the 5-year pledge puts you in a position where you're building that capital base. And anybody who has a capital base doesn't have to go to work. You just don't. You have capital. Your capital makes money. I just showed you what a person could do if they were a slow acquirer of Oklo stock. Now remember, the thing about Oklo is that this was a wormhole. I call these financial wormholes, where you get an opportunity to zap to a different reality. This was a financial wormhole. This was a financial escape opportunity. Why was that? Because this freaking stock that trades at 144 a year ago was $8.50 a share. A year ago it was $8.50. So right now, 3,000 shares is like, oh my God, that's $400,000. Who has that kind of money? I get that. But a year ago, the shares were $8 a piece, right? And you saw how much income a person can make by selling options on that 144 stock. I own that stock. I generate money from that stock. That's one of the assets in my portfolio. So the most important thing that a child can have in this economy is assets. In fact, this all a college degree is. A college degree is an asset. The problem with that kind of asset is it requires lots of work. You got to work the asset, right? So there's some assets that are passive, some assets that are very active. Active assets are okay if you're young, but when you get old and you don't want to go to work all day, then you need something different. Like if I gave you a $10 billion factory where we were making, nobody here knows how to drill oil, I don't think, right? So why, what you would probably do is go to Exxon and say, hey, I got this oil well. If I cut you in on the deal, would you come and drill this out of my backyard and give me a cut? That's the point, right? So different assets are have different characteristics, and you want to find the assets that are right for you. Just the same way you put on clothes, you find clothes that are right for you. You don't need to wear what I'm wearing. You wear what you're supposed to wear, right? So let's see here. But did you know about covered calls and puts? When I was in grad school? Yeah, I knew about all of it. The reason I wrote the Ten Commandments of Black Economic Power is because I learned from my own experience, partly, and just from research, how tied your economic choices are to your culture. It's not about what you know. A lot of us know what to do, but sometimes if you think something's just not for you, you just won't do it. I like when I was overweight, I always knew exactly what to do to lose weight. I just didn't have the habits. It just wasn't part of my culture. Now exercise is part of my daily culture. I get up at 5 a.m. with my wife and we go to the gym. So once it became part of my culture, then now selling options is easy. But back then it was like, oh well, I don't know. I got other things to do. I was a student. That was my I was it was student culture. So I would study for classes and all that stuff. Let's see. Can we still trade the iron condor for tomorrow? Yeah, you can trade up. The big thing though is that the stock prices will have moved, but the iron condor is in. If you log in at the blackbusinessschool.com, look under the options income lounge. That's where I put the fast cash action plan. So I put the iron condor in there. I'll do another condor too on a different stock, maybe Oklo or something, and put that in there as well. But yeah, the iron condor is a slightly more advanced strategy. If you're new, I don't know if I'd jump into it right away, but if you're an OG, then the Condor might be for you. It's a great way to generate cash flow and protect your risk on both sides, minimize your risk, although there is still some risk, but you're putting a cap on it. Dwayne says, I bought Oklo at $70, sold for 120, call expiring January 16th. Do I wait it out or is there another feasible option? Let's see, and it expires in January. I can't give you a clear answer on that because nobody knows what the stock is going to do. It really comes down to the three questions I always say you should ask yourself about options. What do you believe? What are you afraid of? And what do you want? So if you believe the stock is going to keep going up, then yeah, maybe you buy back that option at some point. Maybe find a down day and buy the option back if you have the cash. But if you don't believe it's going to go up, then that wouldn't be a good investment, right? When you buy an option back, you're making an investment in the stock. You're investing in the future of that asset. You believe that the asset is going to go up. You could just let it expire. You could just say, "Hey, I made my money. It was a good run. I'm going to go ahead and just let it expire and just take my cut and keep it going, keep it moving, because you won. You won. Remember, you won. Sure, your strike price is 120 and the stock went to 144. But the worst way, I think worst way to curse yourself when it comes to selling options is to count other people's money, right? Or to look at what the other guy made or how much you could have made, woulda, coulda, shoulda. I like to focus on what I made. I count my blessings before I count my curses. I like to think about what I have before I start counting up what I don't have, right? So ultimately, it's not me telling you how to approach this, but I will say that I would just kind of look at it and say, what's my cash flow position? What are my beliefs? If you want to keep dancing the tango with Oklo, you could just buy that option back tomorrow and get out of the contract. But the problem is that, remember, the person that took the other side of that deal is a business partner. So if I go to a business partner, if I start a business and the business hasn't made any money and I say, hey, give me 50,000, I'll give you 20% of the money. And let's say the business blows up and it becomes a $10 million business, they're not going to let me buy their stake back for the same 50,000. People who make suggestions like that are people that don't know business. I heard Megan the Stallion say that about her deal. She made a deal with some small record label when nobody knew who she was, and they believed in her talent, so they invested like $250,000 into her career. And then she blows up and she becomes this $1 billion asset. And then she wants to sign with Rock Nation. That's what happens. You become famous. Everybody sees you all of a sudden. So Rock Nation wanted to buy her out of her contract, and she was like, you should let me out. And they're like, why would we let you out? Like, we invested in you. Now that the money's pouring in, you can't walk away now. And she said, why not? I'll give you back your $250,000. That right there told me, okay, you need to take a business class, because that stake they purchased was only worth 250 when they purchased it. Now that you have become world famous, that $250,000 stake is now worth 10, $20 million. So if you made a reasonable offer, you'd have to offer them something big, to make up for the risk that they took. You get compensated for risk, and so many people just don't understand that. And so, because risk is hard, right? For everybody that gets mad when you see that the boss is making more money than everybody else, just remember, you could have been the boss too. You could have bet it all. You could have put your life savings into the business. You could have made a bunch of investments and become the boss yourself, but you chose not to. Why was that? Well, because you wanted the security of the paycheck. Maybe that's what it was, right? So you can't sort of have the expectations of the owner but have the paycheck mentality, right? If you have the paycheck mentality, then it's very hard to be the owner. But with this, what I like about this though is that you can kind of blend the two. You become the owner, you take some risk, but then you stabilize the risk, reduce the risk, so that you can get that consistent income, which feels a little bit like a paycheck. All right, Derek Smith, what does it mean when some contracts are labeled as weeklies? That means that it has a week to expiration. A monthly would be a month to expiration. With options, you have a lot of options. You can go out, to a year, etc. Let's see, Cass Lewis. I always think about taxes. If you make 7K, how do you estimate taxes due? I'm not a tax expert. I would talk to a tax planner for that. However, basically, when you make income, the IRS will always show up. So there's a difference between a realized gain and an unrealized gain. A realized gain is when you sell the asset and you make some money. And when you make money, they tax you, and you have to pay the taxes on the money that you made. An unrealized gain is when you have an asset that goes up in value, but you haven't sold it yet, so they can't actually tax you until you actually sell it. So that's why a lot of rich people don't sell stuff. They buy, borrow, and die. They buy something, they borrow against it if they need money. They say, hey, they go to the bank and say, hey, I got collateral. I own $1 million worth of land, but I don't want to sell my land, but loan me money against the land. So the bank says, okay, you've got a 40% loan to value ratio. We'll loan you $400,000. And they use the $400,000 for whatever they want while the land is appreciating in value. And as the owner of that asset, they get the appreciation. Does that make sense? Let me know if that makes sense. Give me a yes if that makes sense. All right. And also, by the way, I want to remind everybody, one more time for those who came in late. If you want to see everything that's in your Prime program, I encourage you to explore. Don't try to go through everything, because I literally made sure you had access to just damn near everything, right? So don't try to go through everything. Your head will explode. It'll be too much. Go through the stuff that you need and go to drboyceprime.com, and you can take a look at what's there at drboyceprime.com. Also, get on the text list, text the word options to the number 87948. And when you log in at theblackbusinessschool.com, that's another way to get to the portal. You have the Options Income Lounge. The Options Income Lounge is where I put all the Q&As. That's where I put all of the fast cash action plans. These action plans you can execute step by step. I lay them out as simple as possible so you can execute it and pull the cash out of the portfolio and get paid right away. And then also there's something called the Moneymaker Grid that I put in the Options Income Lounge. Everything has an acronym. So this is OIL, Options Income Lounge, get it? And then also there's something that we put in there called OINC, Options Income Calculator, which I tested it out and I put together the software. And so you can put in a stock, it'll show you the money that you can make from that stock, and then you can make a decision accordingly. All right, couple more questions, and then I gotta go. Y'all heard my phone ring. That means my wife is calling me because it's time to eat dinner. Let's see, Lee, 2 questions. Okay, I'm gonna answer. I can only answer one because the time is a little bit short. I hope that's okay. I bought 30 puts. Could I still lose? You can always lose. I mean, just know puts don't. Just like if you have insurance on your house, that doesn't mean you wouldn't lose anything if your house burned down. It just means that it's going to give you some compensation if your house burns down. So keep that in mind. Insurance does not mean nothing bad can happen. In fact, if you get to the point where you have so much insurance that nothing bad can happen, then the best approach is not to buy the insurance. The best approach is to not take the risk at all. Right? Just don't do it. Like if you want to never avoid getting your feelings hurt in a relationship, then the best way to do that is to stay in your house and never date anybody for the rest of your life. Right? And some people actually do that. That's called risk avoidance, the entire risk avoidance. But if you do decide you want to experience life a little bit more, you got to leave the house and you got to accept the fact that with as many precautions as I take, there's still some chance something bad can happen. Like if I get in my car, I could put on my seatbelt, drive carefully, do all the things to keep myself safe, but there's still some chance that something bad can happen, and I have to be okay with that in order to make that move. So acceptable levels of risk is really kind of the name of the game, and efficient management of risk is the way to do it, right? The risk that you're not comfortable with, you avoid those, and the risk that you're willing to tolerate, you accept those, and some risk you manage by taking some extra precautions, right? So puts do not protect you from loss, but puts reduce the pain. Believe me, when you see that market go down and you see blood red in your portfolio, you're gonna wish you had more puts. You're gonna be glad you bought them. All right, so let's see. Sherry, how do I protect my long-term portfolio when I have a recurring investment and I set it and forget it? That's what put options pretty much do. Another way to protect yourself is diversification, spreading things out. Don't put all your eggs in one basket. Another way to protect yourself is time. Time is a natural diversifier. It waters down risk in a natural way, meaning that if I have a diversified portfolio and I hold it for more than 10 years and I own pretty much high quality companies in the S&P 500, then my probability of losing money is very low, and my probability of losing everything is pretty much zero. So whenever you hear somebody say, I invested and I lost it all, right there, that's a red flag. That tells you right there they did it wrong. Right, that just tells you right there that they did something wrong. So what's the next Oklo? I wish I could tell you, Trina. I don't know. I'm looking around. Inside your login, I will tell you guys everything I know. If you're on that text list, text options to 87948. I'll send out stuff when I see it. If I pick a position that I like, I'll do it. If I see a thesis or a theme, I'll share it. But I don't know. I didn't know Oklo was going to be Oklo. I just had a feeling because I said, okay, so this AI thing's taking off. So what's the next sort of big thing? And I said, oh, the energy, there's an energy shortage. Okay, so energy stocks. Oh, Sam Altman owns this company, Oklo, which is going to make these small modular reactors to deal with the energy shortage. And anybody who knows about the energy shortage, it has to be Sam Altman because he's right at ground zero in the whole AI revolution. So let me just follow Sam and buy Oklo. And that's what my logic was. Also, even with the rare earth minerals, I had that hunch before as well. I just forgot to bring it up because I'd taken so much information. But literally, when the Trump administration started to invest in rare earth companies and they all shot up, I actually had that instinct before. I just forgot to execute on it. So that's a price of not actually following through. But some areas we did okay. Like Intel, I had some shares in Intel. And again, you don't know though. You just don't know, right? And I don't want you to ever think I can predict stock prices. Nobody can, right? So if anybody ever tells you they can predict the price of a stock, they're lying to you. I know the research. I've read the studies. The best experts on earth have tried to do that. They can't do it. They can just get lucky. Like if I flip a coin and I say, oh, it's going to be heads, and it lands on heads, that doesn't mean I knew it was going to be heads. That means I got lucky. People get lucky. So a lot of people mistake luck for prediction. They call it what is it? Causality versus coincidence, right? They because they have a coincidence, they think they caused it. In fact, that's what gambling addiction comes from. They think that because they crossed their toes and snapped their fingers 3 times, it made the card land on blackjack. No, it didn't. You just gonna give yourself arthritis. All right. So Teresa, when I sell a call, if I plan to keep the stock, I don't have to buy a put. Um, well, you never have to do anything, right? You don't have to eat breakfast tomorrow. You don't have to take care of your kids. You don't have to put your shoes on. But for various reasons, you may choose to do that, right? So you don't have to buy puts. But if you find yourself uncomfortable with the risk level that you've taken, then maybe buying a put will reduce that risk and help you feel a little more comfortable with your position. So I'm not one to tell you that you have to do anything. Only thing you have to do is learn and learn yourself, learn your style, learn how you feel. Everybody in this room has a different set of preferences, expectations, different levels of capital, different levels of understanding of the world, different levels of commitment, different levels of risk tolerance. So it would be absolutely fundamentally wrong for me to say, okay, everybody, we all got to do this or we all got to do that. That's not true. That's like me telling you, we all got to wear green shirts with pajama pants. I'm wearing pajama bottoms in the bottom because that's, it's from the pandemic. Everybody's doing Zoom meetings now, so buying pants is kind of a waste of time. And but I wouldn't tell everybody to dress like me because that wouldn't be appropriate, right? So same thing is true when it comes to investing. How are margin loans paid off? With Robinhood, they take money out of your account every month to pay the interest. You can pay it down the balance down whenever you want to. The loan is there as long as you decide to use the capital to hold the assets. You get a margin call if your capital, if your assets drop below a certain point, and they need you to put more cash in. Their goal is to make sure that you always have a solid stake in your investment, right? So they don't take all the risk. Would you sell AMD for covered calls? Asked Sharif. No, but I do own AMD as a long-term investment. But you could sell covered calls in AMD. It just wouldn't give you the same level of income, but you can do that. There are people that do that for sure. Last question. I see there's one more anonymous question. Okay, so I'm gonna answer 2 more and then I'm done. So don't put another question in the Q&A because my wife's probably mad at me now. All right, so Errol, in Robinhood, what's the difference when the option is in the red compared to the green? Red means that it went down in price. Green means it went up. Okay, so green is good. Red is sad if you're an, but that's true if you're an owner. Now, if you're not an owner, red is good because then you get to buy it cheaper. So one good thing about being an investor is always know that the way you'll know that you're getting better at this is when you never look at the market and think it's all good or all bad. There will never be a day where everything's all good. There will never be a day when everything's all bad, because you will know that whether it's all good or all bad depends on what perspective you have. If the market crashes and I'm thinking about buying in and suddenly everything's on sale, that stock that was $100 suddenly costs $88. Oh, that's wonderful. I can get me a bargain, right? Because of the side of the market that I'm on for that particular asset. But if I'm an owner, then it may feel bad because it's like, oh man, my asset value went down. I didn't lose money. I didn't lose money though. Remember, you only lose money when you realize the loss or you realize the gain. You only lose money when you quit. You only lose money when you sell, right? You can't lose. If you own it, the value is always going to go up and down. And that's one of the things about the market that requires you to really commit yourself to mindset and financial psychology. That's why we created in the Black Business School. I'm really proud of the fact we created the first ever. I've never seen another institution create this. We had the first ever Black financial therapy department because my wife is a therapist and she studies anxiety and depression and trauma and all these things. And I said, we have this all over the place in our community and it's affecting our investing and our spending behavior. We got to fix this, right? So why is fixing that important? It's important because when you see the prices of your assets move up and down and you're a traumatized person who freaks out at every little thing going wrong, then you're going to make one of the biggest mistakes investors make. You're going to get scared and you're going to sell. And when you do that and you sell in the middle of a crash, then you you're pretty much giving up at the absolute worst time. You're cementing. You're taking what is a temporary loss and you're making it permanent. And you're giving somebody else with a longer perspective, who's a little more chill, who understands that this too shall pass. They're getting the opportunity to come scoop up your asset and just wait for the price to recover, and then they get all that money that was supposed to be yours, right? You had an argument with your man and you gave your man to the side chick. You don't want to do that unless you don't want that man, right? So the point is to say that really with stock, actually this happened a lot in 08, 07 when Obama first came into office. You had a lot of you had a big market decline. A lot of people, particularly our people, because we got so scared, we started selling in the decline. And when you sold during the decline, what happened was John Rogers wrote an article about it. He said the black community lost at least $1 trillion because we sold so much during the absolute worst time. And the people that made money were people like him who were buying into the dip, and they just held their assets for a couple more years and they made more money than ever. Okay. All right. Next, last one. Can you explain how I get paid weekly without manually exercising it weekly? Well, there's a go through some of the trainings. There's a lot of class. I record every single class, and basically, if I sell an option and it doesn't expire in the money, then the next week I can sell another option. At the end of that week, I have two choices. If it goes past the strike, I can either let it expire and just collect the money and then either buy another stock or sell a put. That's another part of class. All that's in your login. So log in at theblackbusinessschool.com and go in and look at some of the recordings. Or I can buy the option back, right? Which is a little bit of a loss, right? Kind of, it feels like a loss, but it's really just an investment. I'm just buying my stock back, right? And I can then go sell that option again, right? So people that do the weekly thing, what they tend to do is they'll pick strike prices that are pretty hard to reach, right? So typically, rather than picking the strike price that's really close, where your stock's easily going to jump the strike price if anything good happens and you're going to end up selling the stock. If you don't want to deal with that, then don't be greedy. Pick a strike price that's really far away, right? Where the stock has a very low probability of hitting that strike. So your stock's at 140, you sell with a strike of 152 or something. I don't know, just throwing numbers out there. And then your stock moves up and down, but you never hit that strike. So you're kind of selling this extreme probability such that either A, what's the expected is going to happen, which is you're going to collect your money and get your income for the week and then sell another option next week. Or B, the stock will rise so high that you'll be happy to sell. You know, remember, if your stock goes from 140 to 152, you are ecstatic. You are happy. Yeah, there's the inconvenience. Yeah, I got to worry about what to do with this option, but you're happy. You just made $12 a share. That's pretty good, right? So you got paid for your trouble, right? Where people have a problem is when they get greedy and they sell all their options and they pick strike prices that are super close because they want to make maximum cash flow in the moment. When you do that, what happens is that you're selling a ton of your upside. So then that stock shoots up and you miss all of it because you were too short-sighted. So I tend to pick strike prices that are way out there. I ask myself, I say, okay, if this stock hits the strike price and I have to sell, how am I going to feel? And I say, if that price is so high, I'd be perfectly happy to sell at that price. That's the strike price I tend to pick. It reminds me of Mike Roberts. He's a billionaire who he wants to teach a class in the Black Business School, and I got to call Mike and bring him in to teach a class because he's a good friend of mine and I like him. And Mike, I asked him, I said, Mike, what does it take for you to sell your businesses? And he said, all of my businesses are always for sale. And what he meant by that is he said, look, if you offer the right price, you can buy anything you want from me. Right. So ultimately, that's maybe a mindset you take with the stock, unless there's a reason that you want to hold on to it. Okay. All right. So I hope this was helpful. I hope that I hope we gained something from today. We talked for 2 whole hours. It's so funny. I planned to talk for an hour, and here I am 2 hours later. But I wanted to make sure we were thorough, and I thoroughly enjoy speaking with you. Don't forget, you can log in if you want to see everything that's available in your membership. Go to drboyceprime.com. That lists everything. There's so much good stuff in there. There's financial therapy treatments and all kinds of stuff that Dr. Alicia has done, in addition to guest speakers that we've had, things like that. But then also, you can also log in by going into theblackbusinessschool.com. And remember, you've got 2 sections. You've got your main curriculum, and then you've got the Options Income Lounge that has all of the fast cash action plans, the Q&As, the Moneymaker Grid, and also the Options Income Calculator is at the top of the curriculum section. And there's also a link where you can leave me questions. And when you leave me questions, I answer every single one of them. And then what I'll do is I'll text it out to you. So make sure you're on the text list. Text the word options to the number 87948. If you text options to 87948, you'll get early notification of the next meeting that we're going to have. We're going to meet again soon. And I also want to say thank you, Chanel, for helping out. I appreciate you as well. And Chanel, if you want to, I can leave the Zoom open for a minute. If you want to share the link for anybody, if you're dealing with sort of a bigger portfolio, or you want some close-up one-on-one attention, we do have a mastermind. It's called the Winner's Circle. And I think drboycewin.com is where you can learn more about the mastermind. You can interview and talk to Chanel about it. We have to make sure that you're ready, but if it's something that works for you, we have families that are in there and individuals as well. You can talk to Chanel, and we also do private VIP sessions every now and then where we'll bring like 5 people in at once. So you can talk to me specifically about what you're working on, and I can give you direct feedback. So Chanel, I assume you can still hear me. Go ahead and feel free to share that information in the chat. I'll leave the Zoom open for a second, and then I'll shut it down. All right, so have a good night, everybody. God bless you, and I look forward to seeing you soon. Take care now. Bye-bye.